you'll be presented with another setup, but maybe it takes weeks, maybe it takes a few more days. She can't grasp the concept of just pressing buttons and making money on the market. The end goal is I'm going to be a swing trader, but we've got to break down some smaller steps. This is me planning my trade. I'm about to show you why becoming a swing trader could potentially be the best decision that you could make this year, so that you're able to make more money holding trades longer, but also be more confident in your trading. Before we get into it, let me explain some of the biggest red flags or the biggest mistakes that I see traders do when trying to move to swing trading. Some of the biggest mistakes that I personally experienced when moving from day trading to swing trading was relapsing to my day trading timeframes. So I went back to verify an entry or verify an exit in the lower timeframes, and I found that if I could be consistent in the higher time frame and continue to make my decisions in the higher time frame, my confidence was there. Whereas I could tell every time I went to a lower time frame, I wasn't super sure about my trade, or I was looking for additional confirmation where I didn't need it. So if you can continue to stay in the higher time frames when you do make that transition, you will experience a lot more confidence in your entries and your exits. So another mistake that I made while transitioning from day trading to swing trading was placing too many trades. If you can be patient for the setups and wait for the best setup, you don't want to take a B setup. You want to take an A+ setup when swing trading. You want to wait for the best possible setup that you can get. And some things that I also experienced was when I missed those A+ setups, it made me more inclined to take crummier setups. And I didn't truly believe that I'd be presented with another A+ setup in my higher time frame, or I was just bummed that I was gonna have to wait so long for the next one. But if you can get comfortable with knowing you're gonna have to be patient, you're gonna have to wait for the setups, and also that they're gonna continue to come, you just have to keep waiting. It's not like you miss one setup and then, that's it for the year. You'll be presented with another setup, but maybe it takes weeks, maybe it takes a few more days. So just being confident and comfortable knowing that, okay, I missed this setup, but there's gonna be another one in the future. Another red flag. Now this applies to all time frames. Scalpers, day traders, swing traders, and long-term investors. Do not talk about your open positions with family or with friends, or even maybe other traders. It is something that you need to keep to yourself, at least until it's closed, at least until it's done. Because listening to other people can influence your trading decisions, and it's probably going to be in a negative way. I will share some experiences with myself in the past, and I shared some of my open trades with my sister and my mom, and they convinced me to close the trade, even though they know nothing about trading. How is that possible? I don't know, but I'm telling you now, if you talk about an open trade or an open position or an open profit and loss, friends or family, and they give you any sort of feedback, or it could be body language, and it immediately is going to affect your trading. It's going to affect your decision. You're going to maybe doubt it. You're going to maybe want to close it. I showed them an open profit and loss of $10,000, and they were so blown away that that was so much money. They're telling me I would close it. I'd close it. If I had $10,000 right now, I'd close it. Or talking to my mom, she can't grasp the concept of just pressing buttons and making money on the markets. I could visually see it made her uncomfortable. And it, in turn, made me close my trade, where that could have been a $20,000, $30,000 trade. I closed it because I allowed my family to influence my decision. That is a huge trade. That's a big trade, where I know crude oil. I know that wasn't a massive move. That was an average move, but I let it influence my decision. So I know maybe that's one example, and hopefully I can share my experience with you guys so that you don't make that same mistake. But it could be even something as simple as just sharing your open trade on social media, or talking to another trader who has another strategy, and they would maybe come up with a reason to be in the opposite position that you are. And then that's gonna make you doubt the trade that you're in and the decision that you could make by simply just talking about it with the wrong people. So if you've made the decision to get in and it is based on your strategy and it met all your criteria, keep it to yourself until the trade is closed. Another mistake that traders make is closing their swing trades too early. What is the point of swing trading if you don't let the trade play out for its entirety? I have found myself doing that many times this year, and it's just something that you experience. The only way that I was able to overcome that was just simply by letting the trade play out a little bit longer each time, holding those profits a little bit longer each time. I've spoken to a few profitable swing traders, and when they shared with me their average hold time, it really put things into perspective even for myself. So my average hold time, I believe, is anywhere between a week and a half, maybe a little bit less now that I placed a few trades that lasted only a few days last year. But my hold time is about a week. When they shared with me that their hold time was between like 30 days, maybe even more than that, I really felt like I needed to step it up. If my hold time is only a week and I consider myself a swing trader and these other traders are holding for a month at a time, I may need to consider holding longer as well. And I think maybe as you make this transition from day trader to swing trader, you'll slowly start to make that transition. You'll maybe start to hold for a few days at first. Then after a few days, you'll be able to hold for a week. And after a week, it'll be a few weeks. I'm getting to the point where I might be able to hold very soon for a month at a time as well. The longer the hold time, the more profit you can capitalize on. So if you have done your analysis on a higher time frame and it is telling you to stay in for X amount of days or whatever your exit criteria is, and it's not met until weeks later, then you're not following your strategy. All right, now that we've talked about all the red flags and the mistakes that you could possibly make while transitioning from day trader to swing trader, now let's talk about some of the things that you should do. First thing is journaling. Talk about your goals. Write down your goals. This right here was 5 years ago. When I tell you that this journal is gold, every goal that I have written down, I have accomplished. All of my trading goals, my financial goals, I manifested it. And I know that sounds cheesy, and especially this male-dominated industry, they don't want to hear the word manifestation or zodiac or any of that stuff. But you can just simply call it goals. Writing down your goals, affirmations, manifestations. If you give yourself a clear target, there is something, yes, we'll call it the universe, but I think also your brain chemicals. If you say it every day or write it every day, your brain will naturally just be thinking about it all the time. Whether that's subconsciously, unconsciously, you're gonna work towards or gravitate towards whatever that goal is. So outside of incredible financial goals and motivational goals and health goals, we've got to come up with some swing trading goals. If you have never held a trade for longer than a day, we could start with something as simple as that. Writing down, okay, I'm going to hold a trade for 24 hours. Now, obviously, as long as it is within your strategy and your parameters. And then it could be another goal. Okay, maybe the end goal is I'm going to be a swing trader, but we've got to break down some smaller steps. We've got to at least try to work on holding a trade for a day. Then maybe it's multiple days, and maybe it's a week. And then maybe you can give yourself a profit goal. I want to make $100, $1,000. So writing down tangible goals I think is huge, especially when trying anything new. Jordan Peterson said this thing about if you don't have a target to aim at, you're not going to go anywhere. And it's kind of the same where if you don't try, then you'll never go. If you quit, you'll never make it. All of these cool, you could Google a bunch of motivational things, but if you find a target, you have something to aim for. And then you want to plan your trades before entering. So my routine is on Sundays, I like to go through my instruments on my watch list and adjust my lines, make sure I've got alerts set, and really just prepare myself for what's to come this week. Let's go through it here. I've got 2 instruments that I'm going to break down. We're going to start with crude oil. Now you can see some of these lines need to be adjusted, some need to be deleted, and I'll show you exactly what my preparation looks like so I know when I'm going to be getting into a trade. Right now we can see this downward trend line has already been crossed. It is no longer relevant. It's no longer in play. We're going to delete it. This downward trend line, we have a new high to work with here that crude oil created actually just this morning at 70.68. So this downward trend line needs to be adjusted to here. Boom, boom. So we've got a bullish trend line and a bearish trend line. We've got 2 trend lines where the price has not intersected yet. Now I wait. This is what it looks like to plan my trades. As long as I have alerts set on both of these trend lines, the downward and the upward, this is me essentially planning my trade before entering. So now I know I've got a downward trend line. Let's make sure the alert is on, create, and an upward trend line. Alert is on. This is me planning my trade. So now I wait for the price to break out of one of these 2 lines. If the price breaks out of this upward trend line, I'm thinking short positions. If the price continues up and breaks this downward trend line, I'm thinking long positions. So this is me essentially planning my trade. Now let's go to platinum. As you can see here, platinum looks disgusting. We are in complete consolidation. Price is not going anywhere. We are not in trending markets right now. This is something that I don't want to be involved in until we can break out of this consolidation. So as far as my planning trades, I will continue to adjust my trend lines. This steeper downward trend line can be deleted. It's no longer in play. And this less steep downward trend line can be adjusted. We can use this last high here, but now I want to wait until price breaks out of these highs and lows that it hasn't been able to break for the past month. So I'm going to delete this upward trend line that's already been crossed and mark up these highs and lows. It hasn't been able to break lower than 935.3 and it hasn't been able to break higher than 964. I'm going to put alerts on both of these levels And now this is me essentially planning my trade. I'm not going to get involved until at minimum platinum can break out of this consolidation area. So that is what it looks like to plan your trades before entering. So this is incredibly easy to do, especially as a swing trader. This is something I do once a week. It doesn't take me very long. I'll spend maybe an hour, sometimes two if I'm really going through all of the instruments on my watch list, but the two instruments that I do trade, platinum, crude oil, this takes me just a few minutes. The time freedom that I've experienced being a swing trader, the chart time is minimal. Since I'm on a higher time frame, I don't have to do this every day. I don't have to do this multiple times a day. I'm doing this once a week, maybe 2 to 3 times a week. I'm not spending hours in front of the charts. I've got alerts set so that I can close my computer screen and wait for these higher time frame prices to break my lines. So I mentioned that I only trade 2 instruments. I trade platinum and crude oil. The benefits to just learning a few instruments, you really get to know the price movement. You almost develop a relationship with these instruments. So you understand what an aggressive move is in platinum or what an average move is in crude oil. And you can only understand this by truly watching the same instrument for a long period of time. So some of the mistakes that you could make while swing trading is trying to trade too many at one time. You never really develop a relationship if you're watching, 15 to 20 different instruments. Whereas if you can narrow it down to even 1 to 3 instruments, you really become in sync or develop a relationship with that instrument. So you make better decisions. You almost are able to also develop some sort of intuition with this instrument where if you get a break of a trend line or whatever strategy you're using, if you get that entry and you feel good about it, or it is, price has been consolidating for so long and after it consolidates, it makes an aggressive move, or maybe it's reactive or non-reactive to news. So you just will only be able to develop a relationship by watching the same instruments for a long period of time. So also whenever you are making the transition from day trader to swing trader, you have to go to the higher time frames. And what's cool about the higher time frames is they hold more weight. They're much more significant. If you are looking at what the price does in the 1 minute or the 5 minute, there is a lot of noise. There's a lot of movement, there's a lot of volatility, whereas what the price does in the 1 hour, the 4 hour, and especially the daily, it holds so much more weight. It is so much more significant what the price does in these higher time frames. And the most important skill to have, point blank period, in swing trading is sitting on your hands or sitting in your trade. It is patience, letting that trade play out. You have got to be patient for the entries, for the trade management, for the exits, for waiting for the next opportunity. It is nothing but patience. If you can embody any sense of that, you will be much more successful in swing trading. And that is how you make the transition from day trader to swing trader. If you guys want to see all of my results for 2024, watch this video here where I did an entire breakdown of my year using this strategy being a swing trader. Thanks for watching, guys. Don't forget to like, subscribe, drop a comment, hit the notification bell. I'll see you in the next video.